Welcome to ForexTV.com. It's Wednesday, April 9th. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade, the U.S. dollar is lower against the majors. As of 1:25 p.m. Eastern Time, Euro dollar is at 1.5835, while sterling dollar is trading at 1.9767. Meanwhile, dollar yen is around 101.70. U.S. equities are in the red now after starting the session with gains. Meanwhile, the EIA reported that U.S. crude oil inventories fell 3.2 million barrels in the week ended April 4th. This unexpected decline in supplies led to crude oil soaring to a new record high above $112 a barrel on the New York Mercantile Exchange. This afternoon, I'm joined by Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
Oh, it's a wild one, but I'm happy to be here.
Well, tomorrow morning we get both the ECB as well as the BoE rate announcements, and in today's session the euro continues to strengthen, hitting a record high against the UK currency. Now, given the bearish economic outlook for the UK, the BoE is expected to continue cutting rates. But Greg, first off, where's the pound headed given the latest price action?
As you say, the expectations are for the UK to cut their rates. It's probably more in response to the housing weaknesses going on, and also the credit situation for mortgage holders. The Bank of England has cut rates a few times, and the mortgage rates have not followed suit. As a result, the cut tomorrow is probably what would be considered, I guess, a technical move to keep the stimulus going rather than imply a tightening on the consumer, especially the housing for the housing area. The UK inflation, as we all know, is running above their target rate. It's running around 2.5% on a year-on-year basis. They target 2%, and King, the head of the Monetary Policy Committee, has suggested, and people do suggest, that the inflation rate will head more toward the 3%. Which is the top of their target band, and as opposed to coming down. So there's an opportunity now with it sort of in between 2 and 3 to get a cut in before it heads up higher. And oil's not helping things out with it trading above 111 or so on the spot market. So there is an opportunity for them to cut, and things are looking a little bit worse over there with the growth and the mortgage. As far as with all that said, today the pound sterling has actually rallied off the lows. There's better data out of the UK with industrial production, ironically, today, and it's moved the pound sterling actually higher. On a technical level, I'm looking at the 198.45 area to sort of cap the upside. There's 3 indicators that I look at: the 100-hour moving average, the 200-hour moving average, and also a 50% retracement level of the move down from April 4th to the low today on April 9th. So all those 3 indicators are technical indicators, are sitting at that level. So that's sort of my target on the upside. If they do cut by more than 25 basis points tomorrow by chance, we're going to be going through the 196 40 area, which was near the lows today, 50 area, and we're going to be heading down further, probably all the way down to test the market will be thinking about testing the lows that we reached earlier this year, and that comes in at around 193.45 area as the first target. So that's sort of what I'm looking at in regard to the pound sterling.
Okay, well, Greg, speaking of inflation as well as monetary policy, let's take a look at the Eurozone currency. As you mentioned, crude oil continues to soar to record highs, and risk aversion is up again. So it's not surprising to see the U.S. dollar weaken against euro and also the Japanese yen. So let's take a look at euro dollar as euro yen, and if you could give us your forecast.
Sure. The euro dollar testing the 158.96 is the old high price that we've been holding on the upside. We went up there and tested it once, twice. This is going to be the third time if we get a little bit higher today. The 158 around the 158.50 to 58 level. That's the high closing price area for the euro. That's another key level for me today. We so far we moved and tested, got into the 60s and came back down. Now we're trading at 158.40. So I'm kind of watching that level on a closing level today to sort of get a feel. But the facts are that the ECB, the rhetoric that they constantly harp on is inflation, and inflation is well above their target level of 2%, and with oil up above $111 a barrel, they're not going to change their rhetoric. There is no way they're going to change. Trichet tomorrow after when he has his press conference at 8:30, I see no way of him changing his rhetoric in regard to inflation. He's worried about the secondary effects of inflation, mainly in the wage settlements from some of the unions that are going on, and that is on his mind, and he wants to make sure that he's already made his bed. He's already talked about inflation, and growth is slowing. Growth will probably slow even more, but he is not going to give up on the inflation front. So that's why we see the euro so strong and against the dollar, and also against the pound, which incidentally helps the UK in the export market, similar to like the US. At least the UK can sell some goods abroad to the continent. So that is helping out the UK economy a little bit. But things are a bit dicey out there, and but certainly the eurozone is going to remain in its tightening, unchanged bias, which is like a tightening bias in relation to the other areas of the world.
Okay, Greg, and before we wrap it up for today's interview, if we could take a quick look at the commodity currency of the Aussie dollar. Mm-hmm. For the Aussie dollar against the yen and the U.S. currency, what's your outlook going forward?
As we all know, they've been raising rates in Australia. Tonight we have an unemployment report that comes out, which is going to be key for the market. I think 16 straight months they've added jobs. The labor market is very tight. The employment rate is 4%. Expected to go up to 4.1%, and is expected also to add 10,000 jobs tonight, which would be, I think, the 16th straight month that they added new jobs, net new jobs to the market. From a technical perspective, the Aussie dollar, however, has been in a fairly sideways pattern from in between let's say 90 and 95 on the top side. We're sort of right in the middle of that range right now. I see 92.00 as the key level going through tonight. Right now we're above it. I'm constructive on the Aussie pair, until we see it break the 92 level, and that would happen with a weaker employment number tonight. There's always the economy is slowing over there. The stock market went down, I think, 16% in the first quarter of 2008. The consumer confidence is down. Business confidence is down. There is the mortgage market is getting tighter, and it's starting to show cracks. And so there are some cracks in the economy that suggest that perhaps the rates rises are going to be on hold for a while, and you never know if things start to turn. They benefit a lot from exports to China. They're right in that region there, and they send a lot of commodities over there as China builds up. So they do benefit from that. But if things do turn, China, slows down their building because of slow growth in the U.S. or whatever, it's just the traders are keeping their eye on those pairs. And regard to the Aussie yen, that's a big carry trade now for the retail Japanese traders, and that pair incidentally held a held the 100-day moving average today at 95.78. I think I'd labeled that wrong on my chart, but the 95.78 level is a 100-day moving average, and that level was held today on the top side. So that's my key level for the Aussie yen tonight through the unemployment number. If it heads up through it, we should see some further movements up in the. You'll probably see movements up in the Aussie versus the dollar and Aussie versus the yen. If we start heading down, though, there's a lot of people who are along that carry trade, the Aussie yen, and there may be some vicious liquidation as they exit the Aussie dollar.
Okay, Greg, as always, thank you very much for insight and analysis into the Forex marketplace.
Thanks for having me.
Have a great afternoon.
You as well.
This has been your Forex Market Buzz with Greg Michalowski, VP of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.